Bum, bum, ba-dum. Metal, 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 boop, boop, boop. Welcome back to Strong Man Personal Finance, everybody. My name is Christopher Belli. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And yes, it's actually there. And we're going to do some quick napkin math analysis of Meta Magenta. Now, I'm not actually going to plug it into the model, but I just want to look at Meta's most recent earnings and kind of give you my thoughts about it, okay? Is it overvalued, undervalued? What are things you should be concerned about? Blah, 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 blah. So let me go ahead and share my screen. I'm glad I'm actually live now. So, first of all, Meta Magenta is up 18% after hours. Now, that's a pretty big jump for a stock like Meta, because before this, what is their market cap? I guess what they were like $440 billion. And now they jumped up to $474 billion. That's a massive freaking increase in Meta's market cap. But we'll see why. So let's go ahead and read some information here. And then we'll go look at the financials, which it's very brief, but we'll check it out. Okay, shares jumped after first quarter profits beat Wall Street expectations. So shares are up 19%. Revenue, though, came in lower than expected, and guidance for the June quarter fell below Wall Street estimates. That's actually concerning because revenue growth is actually important. For the March quarter, Facebook posted revenue of $27.9 billion, up 7% from a year ago. Not a massive increase for a large cap growth stock now, is it? This was a little short of Wall Street consensus, okay? Let's see. For the June quarter, Meta sees revenue ranging from 28 to 30 billion, falling short of old Wall Street consensus. Blah, 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 blah. Meta said it has 2.87 billion daily active users, up 6% from a year ago. So apparently when I was reading some of the reports, they said it was the user growth that really drove up this spike. Because, I guess the narrative of Meta is, oh my God, are they reaching their maximum capacity? Or are they going to continue to grow or not? We don't know. And daily active users were up 4%. The company says it expects monthly average users to be flat for the fourth quarter due to the loss of subscribers in Mother Russia. Now, I saw something else interesting. I think they said something about revenue being flat, but whatever. All right, so let's go ahead and look at some of the numbers. So we have, for the 3 months ended March 31st. So year over year, they grew their revenue 7%, which for a large company like Meta, that's pretty good, okay? Let's see. Cost of sales is up 31%. Now, right off the bat, that's a little concerning. Their revenue grew only by 7%. Their cost of revenue and expense grew by 31%. That has a negative effect on the gross margin, okay? Was that total cost and expenses? So it may not have been cost of revenue. It may have been all the costs and whatever, because income from operations is down 25%. So just because revenue grows, but your profits fall, that can still have an effect on the valuation of the company, because you value a company by projecting the future cash flows that are coming to you. Okay. Net income is down 21% and diluted earnings per share is down 18%. Okay. Let's see. Now, one thing interesting I noticed is that they're repurchasing shares, which makes sense because a company that is starting to slow down revenue growth, in order to reward the shareholders, they have to do something else besides growing their revenue and increasing their profits. They have to buy back shares. Buying back shares reduces the shares outstanding, which theoretically will increase the stock price. So as of March 31st, 2020, we have $29.41 billion available and authorized for repurchases. So let's see how many shares they can roughly buy back. So that's $29.41 billion. And what is it? Roughly $200. We'll say $200. So they can roughly buy back 147 million shares. Now their shares outstanding is 2.859 billion divided by, let's see, 2.859,000,000. So from the share, if they bought back all of their shares, they used all the money to buy back the shares roughly at a price of $200. They can buy back roughly 5% of their shares, which will increase your ownership by, 5% roughly. That's not a massive return. Okay. It's great they're doing that because that actually does reward the investors, but that's not massive. Now, let's compare margins, which this is my one concern with Facebook. So you go back, God, these freaking ads, man. I do need to get the freaking ad blocker. I keep joking about it, but I'm actually going to get it. So we go back in time and we see some massive fluctuations in Meta's revenue. You go back to 2010, it was 30%. It freaking dropped down to a loss. And they've steadily basically grown their revenues over the last decade. However, the question is, you can see that their revenues, their profit margin is starting to decline every single quarter. So at the end of June 30th, 2021, it was 37%. That's pretty good profitability. Then it dropped to 35%. Then it dropped to 33%. And the most recent profit margin was, let's see, 7,465 divided by 27908. The most recent profit margin for the quarter is now 26.7%. That's a pretty significant drop, okay? You went from 37% 9 months ago, and now you're at 26%. So the question is, when you're looking at the stock, how far are these margins going to fall? Because that's the primary concern. I think the last time I did the model, I said, okay, what if they grow their revenue, or what if their profit margin's 30%? Well, if it's actually 26% or it drops to 20% going into the future, that's going to have a massive impact on the valuation of Meta. It will have a massive freaking impact. So that's my main concern with this company. Is this drop temporary? If you want to research it more, find out why their profit margins are dropping. Because like I said, that's a very significant drop. Their profit margin a year ago for the quarter was 9.4/26.71, 36%, and now it's 20. So it's dropped by a full 10% year over year. That's a little scary. Okay. I mean, it could have been because of the pandemic, and all these people were dumping ad revenue. All these companies were dumping money for ads because everybody had freaking stimmy checks. I don't know. Honestly, I couldn't tell you. It's a better value, I think, than most other stocks out there, like freaking Tesla or even Google McDougal. Definitely Google McDougal. Amazon. For the FANG stocks, Meta, in my opinion, probably is the best deal out there. But you really have to do some more analysis and really consider what's happening with the margins. How low can they possibly go? What do you think the revenue is going to do? Honestly, if you want to be super conservative, you probably need to, I don't know, maybe use 25% profit margin going into the future, or 20%. Do the everything money tool. Or I don't feel like doing mine right now, but you need to really, really be careful. Put super conservative assumptions that you might not think are possible when you're evaluating the stock, and then consider whether you're going to buy it. It's still probably a good deal. Do I even have my model up? Yeah. All right. I'll do a quick vote. Do you want me to do my model real quick? Do the Dave Ramsey. I'm talking about Meta. Do the Dave Ramsey thing. Okay, you know what? I'll do the freaking model really, really quickly. Okay, so we got, am I sharing my screen? What is the trailing 12 months revenue? Blah, 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 blah. Meta earnings. Okay. So Q1, they had 28.22 billion. 28.22. Plus 33.44. Plus. Yeah, that's pretty significant declines in revenue. Yeah, it's definitely because of ads. It's the same thing with Google. I mean, both of these companies benefited from all the stimulus and the freaking money flooding in, because all these companies were, in my opinion, flooding the market full of freaking ads. Okay, so trailing 12-month revenue, 119 billion. Does that sound accurate? Yeah, it roughly does. Okay, shares outstanding. What do we have? Let's see. And don't use this for a freaking buy decision, okay? Don't be a clown. You actually need to do your research. Shares outstanding. 2.859 billion. 2.859 Okay. Discount rate 50%. Revenue growth, we'll say, let's be really conservative, say 5%. Profit margin 22, and PE at disposition 10. Now, if buybacks, Yeah, let's say they buy back 1.5% per year, which I mean they already have 5% roughly they can buy back. So 1.5% per year. Okay. If you'd use these assumptions, that is not a good deal. So you really need to be careful. I mean, realistically, profit margin will probably be a little bit higher. Let's try 30% and a PE of 15. You see how it's all over the place? It's really, really all over the place. You got to be really careful with even stocks like Meta. Because like the last time I did this, I think I had 6%, I had 30% profit. Yeah, I roughly had it at a buy at like 185 for a 15% return. But if one thing goes wrong, if those profit margins stay at 26 or go lower and the PE drops, now it's not such a good deal. So that's kind of my thoughts on Meta. I don't know. I'm kind of glad I didn't really buy it. I was kind of like, maybe. But I was kind of hoping it would really get, truck stopped on earnings, but it hasn't so far. So that's my thoughts. I'm just going to sit in the sidelines with Meta Magetta. Let's see. Got to be 3% revenue growth, TikTok competition. Yeah, I mean, if it's 3% revenue growth, that's even worse. So be very, very careful, ladies and gentlemen. But like I said, it's probably a better deal than some of those other freaking stocks out there. But you could always just buy VT too. If you invest long-term, you have to believe that metaverse will be a success. And Zuckerberg, well, that might be a long time. You got to wait for freaking the metaverse to work itself out. So, I mean, maybe Facebook will start growing its revenues again, and the profit margins will increase. But you see the trend; they're going down, 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 down. Revenue's slowing down. They're doing a little bit of share buybacks, but looking at these earnings and seeing that drop in profit, which I didn't really expect that, but then you never know. That's a little concerning to me. So. I would even wait another quarter to see what happens with the net margin, because the net margin drops even more below the recent norm. That's kind of scary. So whatever. I'm not buying. I would prefer Netflix. I'm all in on commodities in China. You think Kevin honestly respects Jeremy? No, I don't. So that's about it, ladies and gentlemen. Meta Magetta. Could be a buy, could not be. All depends on your assumptions. Have a wonderful night. Cheers.